We'll be going over IRS Form 8453-FE. This is the U.S. estate or trust declaration for an IRS e-file tax return. So this is the declaration document that would accompany an electronically filed Form 1041, either for an estate or a trust. You don't file this electronically. You do not file this in paper form. You would file this electronically with the tax return. So we'll go over this form. It's pretty straightforward. It's one page, and most likely, if you use a paid tax preparer, they're going to have all of this completed. It's a summary sheet where all of the information comes from your IRS Form 1041. So it should be pretty straightforward. I'm going to walk you through each section so you have a better understanding, specifically either as a fiduciary or an executor of an estate that's filing a tax return. So at the very top, before we get to the parts of the form, we have taxpayer information. Again, this is probably going to be auto-loaded from tax preparation software, but it should contain the fiscal year at the very top. So if it's a calendar year tax return, then this would be blank. This is an example of a fiscal year based on the federal government, right? So a fiscal year at the federal government level starts on October 1st of a tax year and then goes through the end of September the following year. So for 2023's tax return, this would be the fiscal year that, the 2023 form, this would be the fiscal year that begins in 2023 and then ends in 2024. So the name of the estate or the trust, the employer identification number, and then the name and title of the fiduciary, the executor, the administrator, whoever is responsible for the proper preparation of this tax return to the taxpayer. So there are three parts to this beneath the taxpayer information. There's part one, which is the information from the tax return. Part two is the declaration of the fiduciary. And then part three is the declaration of the electronic return originator and the paid tax preparer. And we'll get into a little bit more depth about those roles in a moment. So in part one, this is simply taking certain pieces of information from the Form 1041 itself. There's no changes, there's no modifications to these numbers. This is just pulled from that Form 1041. So I created some numbers here just to kind of fill in as placeholders. Let's imagine that line 9 was the total income on Form 1041. That becomes line 1 here. That's your total income, and we've got $100,000 of total income. From that, line 18 is the income distribution deduction. So trusts and estates get a deduction for the income that was earned yet distributed to beneficiaries or what have you. And then on line 3, we have taxable income, which is from the Form 1041, line 23. In this case, it happens to be exactly the same as 100,000 minus 70,000, but that's not always going to be the case. I just made it so in this example. The total tax, I actually used a tax table or a tax rate calculation to come up with this based on $30,000 of income. And then the tax due or overpayment. I wasn't able to find any reference that says whether or not this should be a positive or a negative number based on whether or not the tax is due or not, but this isn't the tax return itself. So this will be auto imported, and I'm sure that the developers on the tax software have figured this one out. So this will come from either line 28 or line 29 of the Form 1041, and there should be a value in one or the other. Whether it's the tax due, whether it's the tax overpayment. So in part 2 is the declaration of the fiduciary, and we'll quickly recap what the fiduciary means. So first in line 6, this is only if there is a tax due and the fiduciary wants the IRS or the Treasury Department to pull the taxes owed via direct debit, also known as an ACH, electronic funds withdrawal. So if that's how you want to pay any outstanding taxes, you would select the box on line 6. Otherwise, leave it blank. So once you check this, the Treasury Department will initiate that electronic funds transfer. And then there's further instructions if you need to revoke a payment for some reason. You would call the 800 number no later than 2 business days prior to the payment date. Then you would you need to call, or else the money's going to come out, or they'll at least attempt it. And then if there's insufficient funds, then you'll probably get a rejection notice, and you'll probably see some sort of a charge, a finance charge from your financial institution. So the rest of this basically captures what the fiduciary is declaring under penalty of perjury. So first, that all the amounts that are being reported are the same as the corresponding lines of the tax return. Second, that the fiduciary has examined the electronic tax return, all schedules, all statements, and third, that they are true, complete, and correct to the best of their knowledge. So and then 4, if they're not the transmitter, if they're not actually sending the tax return directly to the IRS, then they are consenting that the person that is designated as the transmitter has their permission to send that information to the IRS. And then finally, they consent to the IRS sending a confirmation or an acknowledgement of receipt that says that the return has been accepted, and saying that the return has been received, and then separately an indication of whether or not the IRS has accepted the return, and if the IRS has not accepted the return, then why the return was rejected. So all of this, those 5 things, that's what you agree to, whether or not you check box 6 or not. So as a fiduciary or an officer representing the fiduciary, you would sign and date this form. At the bottom on part 3, there are 2 spaces here based on whether or not the electronic return originator is also the paid tax preparer. So generally speaking, the electronic return originator, or ERO, is the person or the entity that submits the tax return electronically to the Internal Revenue Service. There are certain tax preparation firms where one person will actually prepare the tax return, but then a different firm or person may actually do the transmittal. So this would happen in large circumstances. Typically your local accountant is probably going to be one and the same. The paid tax return preparer probably would also be the same person that's submitting it. So the ERO field will be completed one way or the other. So the ERO would sign this, date it. If they're the paid tax preparer, they're going to check this box. If they're not also the paid preparer, then they won't check the box, and they will let the paid tax preparer complete these fields. They'll also check if they're self-employed. The ERO will submit either put in a Social Security number or a preparer tax ID number. The preparer tax ID number is the identification number that a tax preparer is required to use on any tax return where they're paid to complete the return. So as a user, that's kind of a warning sign If someone does not have a PTIN, but you're paying them to file a tax return or to prepare a tax return, the IRS considers those types of people to be ghost tax preparers, and they are consistently on the list of the IRS's dirty dozen tax scams, meaning that one of the most common ways taxpayers can be defrauded for money is by following guidance from a ghost tax preparer. So anyone that is preparing any part of your tax return should have a PTIN. So this is an example. I've changed my actual PTIN a little bit, but that's what it would look like. And then in these fields, the firm's name, the employer ID number, and the phone number. So a firm applies for a PTIN by filing IRS Form W-12 with the IRS. You can apply for an EIN by filing Form SS-4, and an employer ID number is a tax identification number for any taxpayer that is not an individual. So if this were not checked, you would also have to put the tax preparer's name. So the name, signature, date, PTIN, firm's name, address, the same information as up here. So, but if they're two different people, then two different people would have to complete each of those parts. So this is due with the tax return. So there's no reason why the tax return would be filed on time without this form. There's no reason why this form would be filed on time without the tax return. So a couple of notes. One note is on line 5. If you do have to pay taxes, you can pay electronically. You can also send a check or a money order with the voucher, IRS Form 1041-V. That's the voucher. And then you can also use the electronic federal tax payment system, or EFTPS, in order to pay taxes. So you have several options there on paying taxes. And then again, line 6, you're only checking that box if you choose direct debit. So, and here's the official definition of the ERO. That's the one who deals directly with the fiduciary, for fiduciaries that wish to have the tax return electronically filed. A paid preparer can be separate. Does not necessarily have to be the ERO. It could just be someone that's doing all the data entry in the backfield. So I think that's all we have for this tax form. It's pretty straightforward, and most of it's going to be automated. But if you ever see this, this is what you should understand as the fiduciary. So we cover this in a little bit more detail, and we do cover some of the nuances we didn't discuss here in our article. So if you wish, you can go to the link that will be in the show notes, or you can go to you can go to our website, teachmepersonalfinance.com, type in IRS Form 8453-FE. Make sure that you include the -FE, because there are multiple versions of IRS Form 8453 that all have to do with e-file tax returns. So if you like we'll put links in the show notes to articles and videos that we've created about some of the forms mentioned here. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's another topic that you'd like to see covered in an upcoming video, please hit me up in the comment section. Thank you very much and have a great day.